Hey guys, I thought I'd give an update on my Robinhood portfolio since we are getting close to the end of the year 2022. So I thought I'd just kind of give a recap on how my portfolio has done this year and kind of my plans going forward into 2023. And so with my Robinhood account, my goal is to get to $100,000 no matter how long it takes. There isn't really much of a timeline, but my goal is to eventually get to $100,000 in my account. And regardless, no matter how long it takes, I'm still going to keep updating you guys every few weeks, at least once a month. So this is definitely not like a day trading technical analysis account. This is just long-term growth, and hopefully I can get to that $100,000 here soon. And this is not just purely off of gains. I am adding a few $100s to $1,000 a month into my Robinhood portfolio. So I am slowly adding money into the account every single month. And I think that's kind of the way to do it. That's the superpower in all this, is as long as you're consistently putting money into your account, whether you're returning 3% every year or 50% every year, that's still going to be your superpower of helping your account grow. So that's kind of my goal here, is to add money every single month into my Robinhood account, and hopefully, like I said, we can see it at $100,000 one day. So jumping into the account, this year has been pretty rough. I am down 21% this year. I am a pretty new investor, and so I've only been investing for about 5 years. And so down 20% is a pretty big deal to me, but I'm sure some people have seen worse. And I don't really know if this is like the average. I don't know if this is above average or below average of the average retail investor's account. All I do know is that according to what I've seen, I saw a YouTuber that uploaded a video on his account and he was down 43%. I think he was mostly invested into tech stocks, so that makes sense. So it made me feel a little bit better about only being down 21%. But let me know in the comments below, guys, what you are at, what your 1 year return is. Maybe you're positive, maybe you're up 20%. Let me know in the comments below and we can kind of compare. And it's not really like a competition, I'm just curious. So to be completely honest, I don't know if I want to go over every single stock and ETF in the portfolio, because I feel like that would be kind of redundant, because a lot of these are buy and hold stocks. A lot of these I've just been holding for the past couple of years now. So these are going to be no different from the stocks that I've talked about in my other videos. But I did want to mention a few stocks that I recently added to my portfolio that I thought were worth mentioning. So this first one I wanted to talk about is Jack Henry and Associates, or JKHY. So this is a stock that I've been watching for the past 2 years now, and I just added shares into this stock. And with this one, I'm planning on doing a swing trade. I know I just mentioned I don't really do much trading in this account. It's more so buy and hold. But with this one, like I said, I am planning on doing a pretty big swing trade depending on what the stock price does. So I recently bought it around $178. And I'm projecting that it's going to go up into the 200s again. It reached around $200 this year, and so once it goes up to that range, I'll make about 16 or 17%, and that's when I'll sell out and move the profits into another stock. But as you can see, I do try to be really careful about it, so I only do about $2,000 to $3,000 at a time, and then if I do get good at swing trading, I'll maybe increase the positions down the road. So JKHY is one that I'm planning on swing trading, hopefully making a good profit there and either pocketing those profits or moving it into a different opportunity with a different stock. So this next one that I wanted to talk about is Costco, or Cost. And this is one that I've also been investing in for almost a year now, and I do plan on holding it for a while. And it can be a good swing trade opportunity as well. But for me personally, this is one that I plan on buying and holding for the next 5 or 10 years. So my total return right now is about 6.26%, or a $117 return. So going down my portfolio, there are these 3 dividend paying stocks that I did mention in one of my recent videos. So they're currently paying just insane dividends right now, and I only own a few shares of them each. But because they pay such high dividends, the stock prices just kind of go crazy. So for example, with PBR, or Petrobras, as you can see, it's down 22% over the 3-month period, almost 25% this month. But the dividend is currently paying at 62%, which means if you had $100,000 invested in the stock, after 1 year, you get paid $60,000 in dividends. But the catch with these stocks, there's always a catch with this. Whenever there's something that seems too good to be true, it usually is. So the catch with these stocks is that they can dip down 20, 30% or 50%, and then they can cut the dividend whenever they want. So you could be out 60% with no dividend payouts. And then the same thing with the next one, ZIM, Zim Integrated Shipping Services. Kind of the same thing. It's down 10% this week. and it's paying a crazy dividend though of 109%. But again, that could be cut at any time. So really risky with these stocks. High risk, high reward. You never know. Maybe you will get paid that 100% in dividends every year, and it ends up being a really good buy and hold. That's for you to decide. And so as you can see, I only have a few shares of each. This next one, same thing. Starbulk SBLK, down 23%, paying a 33% dividend. So really up to you to decide if you want to buy and hold these stocks and see if it's worth it to get paid out those high dividends. And then going down, we have MasterCard, which I actually sold one share of MasterCard a couple weeks ago because I wanted to increase my cash position, because at that time I thought the market was just going to keep tanking. And so I sold out of MasterCard. Probably wasn't the best idea. I actually kind of regret it, but I sold one share a couple weeks ago, and I'll probably keep investing into MasterCard for this next year going into 2023. This next one I wanted to talk about is NEE, or Nextra Energy. This is an electric energy company. So this is also another one that I, as an investor, can decide whether or not I want to make a swing trade here and there or buy and hold for the 5 to 10 year time horizon. So I'm up about 11.5% with this stock, or $35. And of course, that'd be a lot higher if I had more money invested into the stock. So another one that I'm kind of deciding for myself as an investor if I want to swing trade it here and there or buy and hold for the long term. And then going down, I also wanted to show this one. It's FICO, or FICO. I'm guessing they released positive earnings because it jumped up about 30-40% this month. So I'm currently up about 44% on this stock, or $300. And it's one of those where, I wish I would have put in 20 grand into FICO, but of course I didn't know that that's how positive the earnings were going to be and that it was going to jump up 30-40%. So I guess I consider that one kind of lucky. So going down to the dividend paying stocks, some of them have performed fairly well. For example, the SPHD monthly dividend ETF. It's been paying me about $5 a month, $4.50 a month, every single month in dividends, and it's up about 2.73% this year. So this one has been pretty flat this year, done fairly well. And then there are a few that have just performed horribly, like AGNC this year, down 41%, but it's only paying a 15% dividend, which means it would take me years to recover that loss. So that puts me in the position of, do I sell or do I hold on to it to hopefully recover those losses? That's just up for me to decide, but not very impressive there and pretty disappointing. So I do look at the chart with some of these stocks before I pick them and before I invest in them. I kind of study the 5-year return, the 10-year return, and just kind of study the consistency and see if they're returning 20%, 30% year over year. A lot of them are. There's probably a handful, especially in my portfolio, that have performed that way, but this strategy doesn't always work. Sometimes the company can be performing incredibly well for 20, 30 years, and then one year they take a huge hit and the stock price just gets chopped in half. And so Adobe is a good example of this. It's performed incredibly well for the past 20 years, just year over year, 20% gains, 30% gains. But then this year, as you can see, it's down about 51%. And thank goodness I don't own too many shares of Adobe. I think at one point I owned like 5 shares. I kind of dodged a huge loss here because I only own half a share of Adobe. And like I said, it's down to 51.4%. And I have a loss of 39%, or $146. So this strategy doesn't always work. That's why it's really important to do your own research and do your own due diligence and really just kind of study what these companies will do and what the stock price does. And no matter what, there's always going to be a risk involved, like we've seen with Adobe. So I know this is kind of the cliche thing to say, but it is really important to invest into multiple different sectors and probably more than at least 10 different stocks at a time, and spreading out what you're investing in so you're not just too heavy into one stock or one sector. I also personally like to have a good mix between stocks and ETFs because ETFs tend to be a little bit more safe, more diversified. That way my portfolio isn't too volatile and I'm losing too much money at a time, and I have value added to my portfolio as well. I know this was kind of a quick update on my Robinhood portfolio, but I wanted to keep it consistent for you guys. If you have any questions or comments about my portfolio, just leave them below and I will catch you later. See ya.